Okay, so yesterday we started the pursuit code question, and we went a significant deal into it. So we were asked to prepare a report for a valuation, and what we did was we found out that they gave us information regarding pursuit code, its value, telling us that the value of pursuit code was 140 million. So what we did was to value Fodaco using free cash flow to firm. So free cash flow to firm, our work was appreciating that they are giving us information for us to be able to compute the free cash flows to the firm. First of all, giving us the 4-year figures, or giving us information to calculate the 4-year figures. First, we had to calculate growth for sales using historical growth method. So we used geometric growth to calculate the historical growth. We got the historical growth as 5.99, which was approximately 6%. We now use that 6% to estimate the growth rate for the next 4 years, after which we also did the operating profit margin. And we found out our average operating profit margin, which is sales over, so operating profit over sales for all the years was approximately 32%. And I said in the exam hall, what would be more beneficial to you is to just assume that the current year growth rate will be reflective of all the other of the future growth rate, because they didn't tell you anything about using average operating profit margin. So you can, if it's to save time, you can just use the current operating profit margin, and you will see that generally speaking, the current operating profit margin will be reflective of the average profit margins for the time period that you are given. So we got that as 32%, and we used the 32% as our operating profit. Then we charged tax, and then we calculated our additional investment, and we said the additional investment was given using our current sales and then the future sales over a 4-year period, so that we were able to get the incremental sales. And once we had gotten the incremental sales, we said that our additional investment will be 22% of the incremental sales. And so we threw that figure into our pro forma, and then from there, we're able to get our free cash flows. After getting our free cash flows, we calculated our terminal value. Our terminal value being using that same free cash flow 1 plus G divided by WACC minus G. We're able to get our free cash flow, our terminal value. So once we got our terminal value, we put that terminal value into our pro forma, and from there we used our discount rate of 13%. In the first valuation, calculating the weighted average cost of capital was not complex. It was just calculating our cost of equity using CAPM, because we had gotten our beta from the question for Fodaco. And so we estimated our cost of equity at 13.68, and then our cost of debt at 9%. 9% was given to us directly as their borrowing rate in the question. And from there, we're able to compute our WACC based on the value of equity and the value of debt. So our WACC approximately 13%, and we use that 13% to discount our cash flows, so that we're able to get our present values, and the summation of these present values gave us our value for Fodaco. And so that was very important part of that first computation, and that basically ends our Appendix 1. So in Appendix 2, we did a quite similar thing in computing the valuation of the combined company. So the valuation of the combined company, they gave us our initial sales revenue, and then we're able to compute the other sales revenue as being the growth rate of 5.8%, which was given in the question. and from there we're able to compute our operating profit margin. Our operating profit margin too was given to us directly in the question. Then we charge tax. They told us tax was 28% for all the companies, so we're able to use that 28%, subtract the tax, and do additional investment similar to the first one. The only thing was that they made the additional investment computation slightly easier. One of the things I want us to focus on and to go back on is where you're calculating additional investment, you have to concentrate on the fact that you are going to use the current year as the year zero so that you can do the incremental cash flows, the incremental figures that will be used to calculate your whatever the percentage to the dollar is of your additional investment. So in this question, they didn't give us the additional investment. So they didn't give us the initial additional investment or the initial figure to use. So we had to use our current revenue to approximate the remaining. But in the other question, because of the way the question was structured, they had to give us our initial additional investment as 513,000. So we used that figure. And then for the other years, we just used our revenue because they told us it would grow at 18% or 18 cents per dollar to the incremental revenue. So we calculated our incremental revenue, the current year minus the previous year for each of those years. So when we got our incremental, we now multiplied by 18% to get the other year 2, year 3, and year 4. And that figure now goes directly into our pro forma. And then we calculate our free cash flows. Then we can estimate our terminal value. Our terminal value, still using exactly the same terminology. We use the year 4 free cash flow. So the year 4 free cash flow, we use that to estimate our terminal value. So our terminal value plus the growth rate in both valuations, both the value of Fodaco and the combined company, they told us that the terminal value, that's the value after the first 4-year high growth period, will grow by half of the 50%. I can't remember how they put it. So half of the previous growth rate. So if the growth rate in this case was 5.8, then the half of that growth rate will now be 2.9. And so we use that 2.9 as our G in computing our free cash flow, getting a WACC. Okay, but before we could do that, we would have needed to calculate our WACC. And I think the most complex part of this question individually, in terms of calculations, was calculating the WACC. So that's where a significant portion of the difficulty in this question, maybe not necessarily the marks, but the difficulty level. If you get stranded in the exam, assume WACC and move on. WACC will be somewhere around 8 or 9%. Cost of equity will be somewhere around 12 or 13%. Your cost of debt will be lower, maybe 6 or 7%. If you get stranded, assume one of these figures and move on. If you're hearing me, if there's no way you're not hearing me now, I'll just cry. Please, are you hearing me?
Yes, sir.
Hey, God. Imagine I just finished all this and I hear that nobody was hearing me. Okay. Okay, so please be talking from time to time so that I'll be able to check myself. So our work was where the difficulty was. I know that for the amount of difficulty of this question, it might surprise you that the amount of difficulty of this computation, it might surprise you that I have not done that. I would like to check how many marks was given in the exam for this computation. I won't be surprised that it's 3. I won't be surprised that it's 3. Because the total marks of this valuation was what? The total mark in this, for the valuation of Foda and the combined company?
16 marks.
16, Abi?
Yes.
So 16, it can be, the maximum that this calculation of this work will be, for this second part, will be 4. It can't be more than 4. And it is significantly, it's almost half of the stress of this question. And it will not get corresponding high marks. So for the work, the only thing is, if your hand is very strong, then you would enjoy getting those 4 marks. So our beta assets, they said one of the things they told us was that they gave us equity beta basically for the for both Foda and Pursuit that we are combining to give you the combined company. So since they gave us equity beta for both of them, they now told us that their asset betas are, we can combine their asset betas to get the asset beta of the combined company. So using their market values. So first thing was to ungear the asset beta of both companies. So we started with Fodaco. We ungeared its beta to get 1.417. And then we ungeared the beta of PursuitCo using our Modigliani and Miller beta asset is equal to beta equity value, debt 1 minus T. So we use that formula to get our asset beta for both of them. And once we had gotten that, then we were able to use that, something we've done before. So we get the beta asset of the total being the weight of one times its beta plus the weight of the other times that other's beta. And so combining those two things, we were able to calculate our beta asset of total. So once we got our beta asset of total.
Someone is talking at the background.
Okay, I don't know whether the person is following what we're doing or something else. Is there any question? Okay, so if there's none, we move on. So we now said that we're now able to calculate the weights for both of them. So we got 22% and 78% approximately for the weights for these two. So what we are going to put into our calculation of the beta asset total. And so once we got that, we're able to calculate our beta asset total as 0.848 for the combined company. And once we had that, we're now able to use that beta asset total using the same Modigliani and Miller formula to make beta equity our subject formula, so that we're able to calculate our beta equity as 1.459 or 1.46 for the combined company. And so with that beta equity, we're able to calculate the cost of equity for the combined company as 13.3% or something. So 13.3% here, so that our cost of debt was already given in the question as their borrowing cost, which was 6.4%. And once we have all that information, then we went on to calculate the WACC for the combined company, and we got the WACC as 8.9, approximately 9%. And that 9% now, we can now carry that 9% and go back to calculate the free cash flow to the firm to complete it. So we had all the other inputs apart from the 9%. So when we get the 9%, we can now put that 9% into calculating the free cash flow, our terminal value, using the free cash flow in the fourth year. Once we got the free cash flow in that fourth year, then we went back upstairs and fixed that terminal value into our computation. So once we got our terminal value, we were able to get the free cash flows after terminal value, and then discounted them at the 9% WACC that we had calculated. So got our discount factors at 9% for the 4 years, and discounted to get our present values. And that present value gave us our value of the combined company as 189 million. 189, okay, how much was that? Yeah, 189 million now. 189.161 or 162 million. Because remember, we are working in thousands all through. So it meant that the synergy was the value of the combined company minus the value of the two individual companies. And when we computed that, we got our value, our synergy as 9.07 million. So that was where we were. So that was our synergy. Is that clear? Is that fine? And William, do you have any idea of what I've just gone through? But I think you are the only one that was not here. William? Okay, if you're talking, you're on mute. If you're not talking, then you're not talking. Okay, so we go through, we continue. Is there any comment, any question, any issue? And then I implored us to try as much as possible to look at the question before we come back today. Now, usually when one company is acquiring another company, the acquirer will usually pay a premium. Is there any premium given to us in this question? Did they say anything about Pursuit paying a premium for the acquisition of Foda? Whether Foda goes, yes. Okay, they said, oh, Nahara, what am I doing? Oh, God. What's the
25% premium?
Okay, where's that? What question is this? 80, Abi?
That one is 67. The first paragraph.
Okay, I'm on the question now. It says that, okay, so Pursuit estimates that a payment of the equity value plus a 25% premium will be sufficient to secure the purchase of Fodaco, right?
Yeah.
Okay, so we look at this now. So this is the benefit that it has created. Now, the other things we will need to find out are, once this synergy has been created, then it will pay a premium, Abi. So that's the next thing to think about. I don't know where to put that in, whether to put it here or to bring it down. Okay, but it's still part of the requirement. Now, what did they ask us for? What did they ask us for? Let's see, if they ask us for synergy, then we're done. To evaluate whether the acquisition of Fodaco will be beneficial to Pursuit Co and its shareholders. Okay, so we're still on this now. So the value, the synergy created from the combined company is this amount. So that's the synergy created. Now it means that additional value, right? That's what they said. No, they said whether the acquisition will be beneficial to Pursuit Co. Now, Pursuit would pay a premium. This thing can also have been in the gist. So pay a premium. You said?
Body or
it can be in the. It will still be part of our discussion, definitely. We can, well, I don't want to calculate. It's a straightforward calculation if you get, so we can use that. We can go to our body of our report and use that as our report so that we'll have something to write. If not, it's.
So I'm a bit lost. In the body now, are we going to demarcate all these questions? Like,
You said what?
In the body now.
Yes.
Are you going to demarcate all these questions, or because there are like 5 questions here?
5 questions.
So
5 requirements.
Yeah.
Yeah, we did that yesterday. Now in setting up, we said, so all of them, see them here now. So they said introduction. We said we give our introduction. We give our introduction yesterday. Then we said acquisition of Fodaco and the combined company will be something else we would write about. So that's where we are now. Then if I get what you're saying, then they talked about limitations of the free cash flow model, then amount of additional finance required. All these are the part of the body. That's how to write a body now. And then we finally concluded. Have I answered your question? Okay. All right. So we go up. Okay. So in our body of the report now, so from the appendix 1 and 2 above, so from the appendix 1 and 2 above, the value, the additional value estimated, or in brackets, synergy benefits estimated as a result of the proposed combination is 9. How much is that? 9.07 or something. 9.06 or I can't remember what I saw.
9.070 million.
9.0 9.07.
0 million.
Okay. However, first sheet estimates a payment of 25% premium, or that's almost inappropriate. Estimates a 25% premium to be paid to the equity holders of Coda. This would result in an additional payment of, so how much is that now? So how much their total value of the company is what?
40 million.
So out, okay, man, of, that's just going to be messy now. So 25%. 25% of 90%. I think their equity is 90% now of $40.01 million. Remember that there is only their equity is to the equity holders, not to the whole firm.
Yeah. Where's your mother?
That's 9 million. Wow. That's all the money gone. Oh. $9.002 million. Okay, so what happens now? Therefore, the remaining value to Pursuit's shareholders so to soon log us out. Once it logs us out, we'll just come back and continue. So the remaining value to Pursuit shareholders would be